Bismillahirrahmanirrahim. This is the first video on governmental and not-for-profit accounting. As the title suggests, we will discuss two types of entities in this video: governmental and not-for-profit entities. In this video, we will identify and explain the characteristics that distinguish governmental and not-for-profit entities from for-profit entities. The main objective of profit entities is to make profit, while the main objective of government and not-for-profit entities is to provide services. When we say not-for-profit entities, it means that such entities do not do activities for profit. Also, unlike a business organization where investors invest to get higher returns, contributors or donors in a not-for-profit organization don't expect anything to get back. Next, we will identify the authoritative bodies responsible for setting GAAP, that is generally accepted accounting principles, and financial reporting standards for all governmental and not-for-profit organizations. Since the objective of governmental and not-for-profit entities are different from the business entities, that's why the generally accepted accounting principles cannot be the same, and governmental and not-profit entities cannot be governed by FASB, that is Financial Accounting Standard Board. Rather, they are governed by GASB, Governmental Accounting Standard Board. So this video will talk a lot about GASB, Governmental Accounting Standard Board. Next, we will compare and contrast the objectives of financial reporting for state and local governments, the federal government, and not-for-profit organizations. Finally, this video will explain the minimum requirements for general purpose external financial reporting of state and local governments and how they relate to comprehensive annual financial reports. This video explains these financial statements that will initially look to you quite complex. Please like, subscribe and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments and suggestions, please put them in the comment section below, and for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. We hope this video helps CPA, AICPA, ACCA, CMA, Masters in Financial Accounting, Masters in Taxation, Masters in Governmental Accounting, Saudi Organization for Certified Public Accountants, that is SOCBA, training courses and other accounting program aspirants. We also hope that this video help fresh graduates who have joined governmental or not-for-profit organization. Let us start with what are governmental and not-for-profit organizations. Governmental organizations are of two types: general purpose governments, They provide many categories of services to the residents, such as police and fire protection, sanitation, construction and maintenance of streets, roads, bridges, and health, etc. Special purpose governments provide only a single function or a limited number of functions, such as education, drainage and flood control, irrigation, soil and water conservation, and water supply, etc. Next, let us talk about not for profit organizations. Unlike governments that collect revenue through taxes, not for profit organizations receive donations. These donations are tax deductible. The donors want to ensure that the contribution is spent for the purpose they have donated. So, not for profit organizations are accountable to the donors. Now let us talk about the characteristics of governmental and not-for-profit entities that distinguishes them from profit entities. Governmental and not-for-profit organizations accounting practices are very different from business organizations. Government organizations are broadly of two types: state and local government and federal government. However, the focus of this video is state and local government and not for profit organizations. So, these are the two we are going to talk about. Governments provide services to people that business organizations are not ready to provide, like providing education, health, security, roads, bridges, etc. The list is really long. This means that the government spends a huge amount of money. The US budget is more than $100 billion. The governments are able to spend this huge amount of money mainly because they collect taxes from the people. That's why the accountability of the government is much more than the business organization. Rather, the accountability is more challenging and complex than a business organization. For example, payment of taxes. People will never be happy to pay taxes. That's why governments are accountable to its people. The accounting practices for these organizations are very different from those of business organizations. And the reason is they have different purposes in the society. Business organizations' purpose is to provide services with a profit motive, while the purpose of governmental and not-for-profit entities is also to provide services but not with a profit motive. Rather, they provide services for the welfare of the society. If so far you have only studied accounting for business, then you have studied accrual basis of accounting. This video deals with accounting for governmental and not-for-profit organization, and you are going to learn another basis that is contrary to accrual basis of accounting, what we call as modified accrual basis of accounting. And I would like to explain you about this. We have a business organization and we have a governmental organization, and suppose there is a purchase of asset for cash. A business organization will record this transaction as assets debit and cash credit. In governmental accounting, it will not be assets, rather expenditure will be debit and cash will be credit. And the reason is, in governmental accounting we follow the modified accrual basis. We'll talk a lot about modified accrual basis because that is the basis of accounting in governmental organizations and not for profit organizations as well. We take another example, like suppose there is borrowing. In business organization, borrowing from bank, so cash will be debit and notes payable will be credit. In a government organization, cash will be debit but not notes payable, rather revenue will be credit. Why? Because the recording of the transactions in business and governmental entities are different, as their bases are different. In business organization, accrual basis. In governmental organization, modified accrual basis. For example, when a government needs money, it is like revenue for them because government can print the money. They can impose taxes. A business organization, if they need money, they have to borrow and pay interest on such borrowings. Thus, accounting practices are different from business organizations because the purpose is different. Governments provide services to people while business sell services to people. Second, finance by resource providers who do not expect benefits proportional to the resources they provide. And let us look into an example in this regard. Think of two families that are living in two adjacent houses. The houses are of the same size. Abdullah, a bachelor, he lives in house A, and while Amir lives in the other house with two children and a wife. Both Abdullah and Amir will pay the same amount of property tax. Although Amir is availing more benefits from the government than Abdullah, as he is sending his children for education and the government is paying for their education. Amir is getting medical benefits for his children and wife, while Abdullah is a bachelor. Then management has a special duty to be accountable for how resources are used in providing services. When the people pay taxes, they expect that the government will spend it on their welfare, and government is accountable as to how the resources are used by the government in providing those services. For example, if people of Jeddah city are paying more taxes than a small village nearby, the people of Jeddah would want that the government provides better and more services for their city than a small village, and for this government is accountable. So let us summarize. Resource providers do not expect to receive proportional benefits. There is lack of profit motive. There is absence of transferable ownership rights. You cannot buy or sell a government like one can buy or sell a business. Government has the power to tax. They can borrow money at tax exempt rates. Let me explain you this a bit more. When a company borrows money by issuing bonds, the individual or the organization that has purchased those bonds will pay taxes on such earnings. However, if they buy bonds issued by the government, they are tax exempted on interest earned on government bonds. Just keep one thing in mind, that the interest rate of government bonds is lower than the interest on corporate bonds. And this is the reason government bonds are tax exempted. Next, let us talk about sources of GAAP and financial reporting standards. FASB, Financial Accounting Standard Board, is the accounting standard setting body for business organizations and non-governmental, not-for-profit organizations. GASB, Governmental Accounting Standard Board, that was set up in 1984, is the accounting standard setting body for governmental GAAP. State and local government organizations, governmental not-for-profit organizations. So, if you are working with a government organization, you have to follow GASB, Governmental Accounting Standard Board, and not FASB. Third is FASAB, Federal Accounting Standards Advisory Board. This is the accounting standard setting body for federal government and its agencies and departments. I would like you to notice non-governmental, not-for-profit organizations and governmental, not-for-profit organizations. Governmental not-for-profit organizations are governed by GASB, while non-governmental not-for-profit organizations are governed by FASB. Let us look into an example. Suppose the city park is operated by governmental not-for-profit organization. They will follow GASB for preparing the financial statements. If the city park is operated by non-governmental, not-for-profit organizations, they will follow FASB, Financial Accounting Standard Board, for preparing the financial statements. Next, let us talk about governmental financial reporting and why they must differ from business financial reporting. Different financial report users with different needs. Users of business financial reports and government financial reports are similar when it comes to titles. Users of these financial reports are the owners, creditors, competitors. So when it comes to the title, they look similar. But let us see how they are different for the two organizations, governmental organizations and business organizations. Let us start with owners. Owners of a business organization are interested in business financial reports to know if it is generating a satisfactory return or not. What are the growth prospects of the business? Should they hold their investment in the existing business or withdraw and invest elsewhere? In case of governments, there are no owners. I repeat again, in case of government, there are no owners. And we will talk about it in more detail, and we will talk a lot about it in this course. Another user of financial reports are the creditors. Creditors of a business organizations are banks and suppliers, and they are interested in business financial reports to know the liquidity and solvency of the business and whether the business will be able to return their money as agreed or not. Creditors of a government organization are the international lending agencies like IMF, World Bank. Interestingly, the interest of users of governmental organizations may be conflicting. For example, the citizens would be interested in paying low taxes, while the creditor of a governmental organization would be interested in solvency of the government. That will be possible only if citizens pay more taxes. We should also note that business can be liquidated or become insolvent and closed. Government cannot be liquidated or become insolvent as they have the power to print currency and levy taxes. Many developing countries are carrying debt incurred by rulers who borrowed without the people's consent and used the funds either to repress the people or for personal gain. Like Anastasio Somoza from Nicaragua, he reportedly looted $100 to $500 million. Ferdinand Marcos from Philippines, he amassed a 10 billion fortune. Jean-Claude Duvalier from Haiti, his successors claim that he absconded with 900 millions. The apartheid government from South Africa, that is widely condemned by the international community, spent heavily on police and military to repress the African majority. Yet another user of financial reports are the competitors. Competitors of business organizations are interested in business financial reports so that they can make necessary changes in their plans and policies to face competition successfully. Competitors of a governmental financial statements may be the foreign country governments, both friendly and enemy countries. So we can see the need of users are different for governmental and business financial reports. Next, let us talk about the objectives of financial reporting by state and local government. Unlike a business organization, governmental organizations do not operate in a competitive marketplace. They don't face the threat of liquidation, and governments don't have equity owners like business organizations. So three things are very important. They don't operate in a competitive marketplace like a business organization. They don't face a threat of liquidation, and there are no equity owners in the case of governments. Governmental financial reporting focuses on stewardship and accountability for how public resources are raised and more importantly, how they are used to provide the services. When government collects revenue or taxes, they need to be accountable to those people. This has to be demonstrated in the financial statements. The financial statements should not only help stakeholders assess how the government acquired resources, but also whether these resources were sufficient enough to meet the cost in the current year, or if some part of these expenses are shifted to taxpayers. Next, let us talk about the objectives of financial reporting of state and local government. Business organizations prepare budgets to ensure that their operations are in accordance to the aims and objectives of the business. However, they can deviate from the budgeted plans if business will generate more revenue or reduce cost. They can spend more than budgeted or they can spend less than the budgeted figures. Just keep one thing in mind, that the primary goal of a business organization is to make profit. Rather, not only to make profit but to maximize profit. Government organizations' objective is to maximize welfare of its citizens and not profit. Just keep in mind that we are talking about state and local government. State and local governments also use budget for their operations, because through budgets they are able to know how they are going to receive and spend money. Budgets are more important in governmental organizations as they have to spend according to the approved budget. They cannot spend more than approved, as overspending is a criminal offense, while underspending reflects government's inefficiency and ineffectiveness, as this do not maximize welfare of its citizens. So people working in governmental organizations must be very careful while spending, as they cannot do anything beyond what is instructed and approved. They are going to compare actual financial reports results with the legally adopted budgets. Auditors, citizens and federal governments are interested to know whether they have spent what was approved or not. Assess financial conditions and results of operations, whether the government's ability to provide services improved or deteriorated from the previous year. Assist in determining compliance. We will be talking a lot about compliance with finance related laws, rules and regulations. People in the governmental organizations have to ensure compliance with laws, rules and regulations during their operations. Assist in evaluating efficiency and effectiveness. Interestingly, efficiency and effectiveness does not exist. The reason being, they cannot trade off between compliance and efficiency and effectiveness. As I have already said, we will be discussing more in the future videos. Next, let us talk about accountability. Accountability arises from citizens' rights to know. It imposes a duty on public officials to be accountable to citizens for raising public monies and how they are spent. At its heart, accountability is about a relationship between those responsible for something and those who have a role in passing judgment on how well that responsibility has been discharged. When accountability works well, it enables a degree of feedback between the government and the public that it serves. While strong accountability is not a panacea for solving the numerous challenges that government faces in a complex environment, it can improve government. It generates incentives for responsible individuals to act in the interest of the public. Sometimes this means that heads must roll following a major failure, but a healthy system of accountability also promotes improvements in how government works. This should include proportionate rewards for good performance, proportionate sanctions for failure, a greater degree of learning that the current system contains, support for responsible individuals to develop so that they are able to innovate and take appropriate risk. Let us talk about the concept that relates to accountability, that is, inter-period equity. In the context of GASB's inter-period reporting concepts, inter-period equity refers to the state in which the current period inflows of resources or acquisition of net assets equal current period cost of services. Citizens pay taxes on an annual basis. So the government spending should be in a way that all costs are paid off from the revenue generated from the current year. However, the government will be spending on projects that are for a period of more than 1 year, like establishing a new hospital, an educational institute, constructing a bridge, or developing roads, and the revenue from the current year will not be sufficient enough to spend on all these projects. The government will have no option but to borrow money. They can borrow by issuing bonds to its people. They can even borrow from international financial institutions. So anytime the government need money, they can borrow. The federal government can borrow it. Do not, if it do not, even if it do not have the money, they can print the money. The government is spending now that is going to pay from the revenue it will generate in future years. That means that the people 10 years from now or 20 years from now will be paying for what is being spent by the government today. A child born in USA in the year 2021 have a $66,000 debt, share of public held federal debt. This explanation do not hold true for state and local governments. They can spend only what they have received. Next, let us talk about objectives of financial reporting for federal government. The Federal Accounting Standards Advisory Board, FASAB, is an advisory committee that develops accounting standards. It serves the public interest by improving federal financial reporting through issuing federal financial accounting standards and providing guidance after considering the needs of external and internal users of federal financial information. GASB sets the rules for governmental GAAP. These rules are used only for external financial reporting. FASAB set the rules for governmental GAAP for both internal and external users. So, the federal government financial reporting should assist report users in evaluating budgetary integrity, operating performance, stewardship, adequacy of systems and controls. We do not find operating performance in state level. Next, let us talk about objectives of financial reporting by not-for-profit organization. Not-for-profit organization financial reporting should provide information useful in making resource allocation decisions. The money has been allocated to the head, it has been received. For example, a donor donated an educational institution to buy books for the courses taught in the institution, and they buy the books as advised by the donor. Next, assessing services and ability to provide services. That means the organization is providing services and have the ability to provide those services. A not-for-profit hospital has beds, doctors, medicines necessary to provide medical services. A school has teachers, students, books, labs, etc. Next, assessing management, stewardship and performance. That is how the money is spent. The management of not-for-profit organization take due care to spend the money donated. No donor would like that his money is spent on administrative expenses rather than the patients and medicines, etc. Next, assessing economic resources, obligations, net resources, and changes in them. The financial statements of not-for-profit organizations should also provide information about the economic resources, obligations, net resources, and changes in them. Next, let us talk about minimum requirement for general purpose external financial reporting. And from here on, we are going to use some financial report as well, and I am going to use the annual comprehensive. You can see here we have a annual comprehensive financial report for the state of New Jersey. Now, GASB requires that a governmental organization should prepare two sets of financial statements. One is the minimum package, what we call as minimum requirement for general purpose external financing. And second is the comprehensive annual financial report. Comprehensive annual financial report. The minimum requirement for general purpose external financial reporting as per GASB statement number 34 are management's discussion and analysis, MD&A. So you can see we have a management discussion and analysis over here. And this is a section within a company's annual report or quarterly filing where executives analyze the company's performance. They tell you what's going on, what happened during the year, how the revenue has come in, where they have gone. So, all these things are going to be explained in this report. You can see here we have management discussion and analysis, government wide, fund level, long term obligations. All these are going to be covered in management discussion and analysis. And this is especially made for those people who don't have an accounting background as well. Then we have the basic financial statement, and you can see we have the government wide financial statement, and we have the fund financial statement. And I would like to show you this one again. You see, in a business organization, you will find only one balance sheet or one statement of activities, but in a government organization we have two. You can see here we have government wide and we have governmental fund financial statement, and you can see that there is a statement of activity, and then we have the balance sheet, we have the statement of activities as well. And so we'll talk in a lot about this in the videos to follow, but at this time I just would like to just give you a introduction about what government wide financial statements are. And these are the set of accounts that are prepared on accrual basis. Then we have the funds financial statements, and these are the set of accounts that are prepared on modified accrual basis. Again, as I say, we will be talking a lot about it in the videos to follow, and I will explain a bit more in a while. Then we have the notes to the financial statement, and these are the notes to the financial statements. They disclose the detailed assumptions made by accountants when preparing a company's income statement, balance sheet, statement of changes of financial position or retained earning. So same task is going to be performed by the in a governmental organization as well. And you can see the notes over here. Notes to the financial statements, and I would like to show you a little bit. You see, these are the notes to the financial statements, and they provide a summary of all these details. We will be talking about each one of them as we further progress in the future videos. Then this minimum requirement finally has required supplementary information other than MD and A, and these required supplementary information is the information that a designated accounting standard setter, for example FASB or GASB, require to accompany the basic financial statements. Required supplementary information is not a part of the basic financial statement. So these are the minimum requirements for general purpose external financial reporting. Finally, let us talk a little more on government wide financial statements and fund financial statement. Okay. So government wide is like a consolidated statement. The states in the country, They provide several types of services like providing education, educational institutions, recreational services, local transportation services, water, drainage, electricity, etc. So the government wide provides an aggregated overview of the government's net position and changes in net position reported for the government as a whole. Fund financial statement, as already explained, governments provide several services to its citizens. In order to ensure that they don't under or overspend for each of those services, they create funds. And government prepare separate financial statements for each fund. So each fund is like an accounting entity by itself. So fund financial statement assist in assessing whether the government has raised and spent financial resources in accordance with the budget plans and in compliance with pertinent laws and regulations or not. Then government-wide financial statements assist in assessing operational accountability, whether the government has used its resources efficiently and effectively in meeting service objectives or not. Fund financial statements. Now, certain funds, referred to as governmental funds, focus on the short term flow of current financial resources. It's a fancy word for cash or fiscal accountability rather than on the flow of economic resources. So we are going to talk about fiscal accountability, and here we are talking about operational accountability. Then the focus on flow of economic resources includes non-cash expenses like depreciation, recognition on the accrual basis, similar to business organizations. Fund financial statements focus on flow of current financial resources, cash basis, and it is recognized uh, on the modified accrual basis. So revenues are recognized when they are measurable and available for spending. Expenditures, when an obligation is incurred, that will be paid from current available financial resources. So if the government is going to spend in the current year, it has to spend from the tax levied in the current year and not next year or the year before. Notice the focus over here is on currently available financial resources. So the accountant has to look into a transaction from two different views. One is government wide and the other is fund financial statement, and we will talk about more about it. For example, if the government has purchased a equipment, so if they are going to record in a government wide financial statement, then it has to focus on the flow of economic resources, operational accountability, and they are going to follow the accrual basis of accounting. And the government will record this as equipment debit and cash credit. In case he is recording in a fund financial statement, then he has to focus on the flow of current financial resources, fiscal accountability, and flow of modified accrual basis of accounting. And purchase of equipment is just like the government has just spent the money, there is no asset. So, expenditure when an obligation is paid from the current available financial resources. So, in the case of fund financial statement, the same general entry will be expenditure debit and cash credit. So, in governmental accounting, we record on two bases. One, we record as an economic resource, and second, we record as a financial resource, how the money has come in and went out. Please make a note, in governmental accounting, if you see the word expense, it means government wide, accrual basis of accounting. If there is a word expenditure, it means fund financial statement, modified accrual basis. We cannot use them interchangeably. So, this completes our discussion on the first part of Introduction to Accounting for and Financial Reporting for governmental and not for profit entities. In the next video, we will look into the real world examples of basic financial statements of local government. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question regarding this session, then please don't hesitate to ask in the comment box or by email, and inshallah I will reply you back. Happy learning and thank you so much.